Hey everyone, welcome back to the Crypto Code. Bitcoin's been getting hit, the timeline is panicking, and this is usually the moment where the best long-term entries start showing up if we stay disciplined and stop trading on emotion. We have a 10-coin research watch list and a simple filter we can reuse in every sell-off. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice. So do your own research before you make any crypto trades. Okay, so when Bitcoin drops hard, it's often less about one headline and more about structure. Fast rallies can leave thin trading zones where there isn't much support in the middle, so once selling starts, price can slide until it hits levels with real liquidity. Derivatives can amplify that move because hedging can force additional selling into weakness, and sometimes liquidity simply rotates. Money runs to safer trades, margin calls ripple across markets, and risk assets get sold together. The key is, a crash is frequently a reset in leverage and positioning, not automatically the end of the long-term thesis. So how do we approach 500x potential without getting reckless? We accept two truths. Most altcoins won't make it, but the survivors with real product market fit can outperform massively over a multi-year window. That's why we keep Bitcoin and Ethereum as the core for many portfolios, and we treat altcoins as satellites, smaller sizing, higher volatility, higher upside. Now let's run through 10 names worth researching during a Bitcoin crash. Before we even pick names, we run through a quick checklist. We want projects with real users, clear utility, and a reason to exist beyond numbers go up. We also want liquidity because illiquid coins get wrecked in downturns, and we want teams and ecosystems that can actually survive a long chop. If a coin fails those checks, it doesn't matter how good the chart looks, and so let's dive in. First, Cardano or ADA. Stablecoins are the bloodstream of crypto markets, so anything that improves stablecoin rails and makes capital movement easier can boost activity over time. Second, Solana or SOL. We like it as a high-performance infrastructure bet, and the signals we watch are straightforward. More developers, more real users, and more apps choosing it because it's fast and cheap. Third, Chainlink or Link. This is picks and shovels infrastructure, data feeds, and connectivity. If tokenization and on-chain finance expand, the plumbing usually gets paid. Fourth, XRP. Whether people love it or hate it, it has resources and distribution. If payments narratives and institutional rails heat up, XRP tends to stay in the conversation. Fifth, Bittensor, or Tau. Most AI crypto is hype, but Tau is closer to an incentive layer where subnets compete, and the strongest contributors get rewarded. High risk, but a clearer crypto plus AI infrastructure thesis than most. Sixth, Avalanche, AVAX. The appeal here is flexible infrastructure for financial apps and tokenized assets, and we watch for real integrations and consistent on-chain usage, not just short-term incentives. Seventh, Ondo. This one sits in the real-world asset lane. If more yield products and tokenized treasuries move on-chain, the platforms enabling that flow can benefit. Eighth, Arbitrum, or ARB. Layer 2s matter because fees and scalability matter. The bet is that Ethereum keeps growing and scaling layers that capture real activity can win. Ninth, Polkadot or DOT. This is a longer cycle ecosystem bet. The question is whether the network attracts sustained builders and durable demand through the next cycle. 10th, Propy or Pro. This is the high-risk wildcard. The thesis is modernizing real estate workflows like title and escrow. A massive market, but execution has to stay strong, so we size it accordingly. And here's the positioning reminder. We don't need every coin to win. We need a few quality theses, solid risk management, and a time horizon that matches what we're buying. Our filter stays the same in every crash. Strong fundamentals, real liquidity and usage, survivability through bad markets, and a market cap structure that can realistically expand. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We've already given away thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.